You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody, welcome to part 2 of our doubleheader of OBC. If you're hanging out in the pro, if you're listening on demand, welcome to this week's episode of Options Bootcamp. My name, of course, is Mark Longo from theoptionsinsider.com, as well as from the network that, man, continues to grow. Dan, just when I thought we were busy enough here on the network, here we are adding 3 new shows in the last 6+ months. A couple of those coming in the last few months. One of them coming in the last few weeks, Dan. So we didn't have enough stuff to do here on the network and enough for our listeners to enjoy. Now we're adding more, including European Market Brief, which just went up yesterday, just recorded yesterday. And of course, Thor, aka the Hot Options Report, coming at you every day after the bell now, breaking down all the wild stuff that's gone on in the world of options that day. And spoiler alert, it's a hell of a lot. You think it's the dog days of summer right now? Check out the Hot Options Report. See all the wild, brand new names that we've never discussed before on the network in 18 years that are breaking into the top 10 these days. It's absolutely wild stuff. So check it out wherever you get our content. Yet another good reason to be subscribed to the full network. And then, of course, if you're ready to take the plunge with Dan down the dark alley, drinking in the middle of the day, only one place to do it, theoptionsinsider.com/pro. That'll get you access to these doubleheaders. We've got the Futures Rundown coming up after this with our good pal Carly Garner, so you're getting access to that. You get Thor in your ear holes. You get pro Q&As. You get early access, of course, to like our chat we did with the folks from Robinhood yesterday. What kind of wizardry are they cooking up to get you options folks to come over to the dark side? Well, you got to tune into that to find out. Options oddities at the end of the week, giveaways, a whole bunch more. theoptionsinsider.com/pro is the place to go. And I do believe he has recovered. He is stumbling back out of the dark alley from episode 1 as we speak. And he is ready to go for episode 2. Mr. P, how you doing, sir?
Doing all right, Mark. Doing all right.
Can you tell that I've had an energy drink or two today, sir? I'm feeling it. I'm feeling good. All right.
Yeah.
Let's get rolling right on into a little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, let's get to some of our questions of the week that we have for you. Pay some of those off. Then I know Dan's champing at the bit to get at us with his MTM patented question of the week, which is, which bottle of wine is best for drinking in a dark alley? Is it Malört or is it Two Buck Chuck? That'd be a fun flash poll. I just gave you free content, Dan. Run with it as you like. But last week on the show, or really 2 weeks ago back on the show now, we were talking, Dan, about a big block of the AUG 25 calls that went up in VIX 30,000 times for 25 cents. We said, man, these people are really feeling some upside in VIX, given the fact that they had about a week to go and they were paying 25 cents for these. VIX went out this morning. Listeners, today as we're recording this, it is August expiration for VIX. And Dan, take a guess where VIX went out. Spoiler alert, it wasn't 25.
Yeah, it was significantly below 25.
1541. We won't get into the mysteries and nuances of VIX settlement. That's a conversation for another day, listeners. But the futures went out 1541. So unfortunately, all those AUG 25, 60% of you wanted to buy those, listeners. That went the way of the dodo. So that 30,000 lot, you're talking $750,000, kind of just going up in smoke there, listeners. So that one's a bit of an ouchie. Worth noting, too, I see some people commenting this. Our good buddy, Mr. Jim Carroll out there, commenting right now as well, saying if you're looking at where VIX settled today, 1541, take a look at the rest of the term structure. August, substantial chasm between the settlement and the future at about an 18 and a half. You're talking over 3 points. That's kind of wild. So maybe the market is pricing in a bit of a Rocktember/October there, Mr. Dan. A weird chasm there. It's something to bear in mind as you're looking at these options. We also had a question of actually a flash poll, Dan, from a few days ago. I know you've been watching, you and I have talked about it, but I know you've been watching the madness that is open of late. Have you slung any open over there in MTM and your chat at all, sir? Have you guys been trading this at all?
John has talked about it in our daily group coaching class, just as he's given some trade ideas on it. I personally have not, but holy moly. I mean, just look at it, will you?
Yeah, it's been wild. I know some of our pro members were talking about overwriting it when it was glued to the below the 2.5 strike, overwriting 2 halves and stuff. Of course, blew through that strike, blew through 3 half and 4, Dan. And that got us to our question, a flash poll from a day or two ago. We said, hey, the AUG4 is expiring this week. They were trading for 35 cents for size, Dan. Again, expiring this Friday. We said to our audience, do you want to buy them? Do you want to sell them? Or are you never touching open with a 10-foot pole? And Dan, that ended up slightly winning. They're in your camp. 45.9% say, I'm staying the hell away from this one. 43.2% wanted to buy them. The good news is if they bought them quick, the stock did break $4, so they probably had a chance to, at the very least, scratch, if not sell these for a winner, if they were deft. If they waited, Dan, they're kind of wearing it. Open back down to $3.12 today. So the open gods giveth, and the open gods taketh away. And today they are demanding their pound of flesh, sir. So if you bought those, if you were the 43.2% that wanted to buy them, no joy for you, but the nearly 11% of you wanted to sell them. You got some cojones selling any upside in open. You said 35 cents, I'll take that. Guess what? You're keeping it, at least for right now, so good for you. All right, and Dan, let's get to our actual question of the week right now, because this alludes to what you were talking about in the last episode about you having some puts on the S&P 500. The $1 million question everyone has right now as we come into the market every day, and we're selling off a little bit right now, so market's looking a little bit red, listeners, back below the 6,400 level in the S&P. The $1 million question is after this massive run-up we've had over the last number of years, but also since April 8th, a lot of people are feeling maybe a little skittish at these levels. And so the $1 million question, are you comfortable buying and holding the SPX straight up right now? Dan, that is our question of the week. I will put it to you. Are you comfortable? If someone said to you, here's a bunch of money, go buy the S&P right now, would you be comfortable doing that? Or would you perhaps sit in cash or do something else? And then B, more importantly, which way do you think our audience is going?
I am not super comfortable in the S&P 500 right now. It is historically very overvalued just from a PE ratio standpoint. And I did not look at the user results. I don't even know if they're available for me to look at, but I'm going to say that that's going to be our biggest category. I bet there's at least 40% of the people who say I'm not comfortable at this level.
You know what, Dan? You are underselling the bearishness of our audience. Almost 61%, 60.6% right now say they are not comfortable straight up buying the SPX. 39.4%, less than 40%, Dan, saying yes. So Uncle Mike and his cronies, not enough to drive us even past 40%. Now, our audience, I will say this, our audience does skew a little cynical, a little bearish, a little, let's say, premium harvesty. So maybe there's some of that baked in there as well. They fade every big move that we see out there. But that said, just putting it out there, listeners, our audience not at all comfortable buying and holding the market right now. And I can see why we're all not comfortable right now, listeners, because it's that time that makes us all a little bit uneasy. It's time for the market taker question of the week.
And now, It's the moment you've been waiting for. It's time for the Market Taker Question of the Week.
All right, Dan, what you got for us? You got a hot update on your Malört versus $2 Chuck poll?
Well, no. What I have is I have a question that I get time to time, and it's a pretty timely one. This happened actually in an investment holding that I have, a company called Pilgrim's Pride. And Pilgrim's Pride announced a $2.10 per share special cash dividend. Now, what happens when this happens? Well, I mean, sometimes if there's just a bigger dividend announced, well, nothing happens. It's just a dividend. But sometimes if it's big enough, and I don't know, maybe they got to use the word special or something, but sometimes the OCC will adjust the strike price, which is what happened with PPC options. And it was a $2.10 dividend. And so I would, where's my account over here? So I had shares of PPC, and I was short the 55 strike call. And so what happens is how this works with any dividend is, let's say the stock is at 50 and they announce a $2.10 dividend. Well, the next day after on the X date, if it opens unchanged, it actually opens $2.10 lower, which seems a little bit counterintuitive, but it's kind of not, because you still have the same value. It was at 50, now it's at 47.90, but you have $2.10 cash in your hand. So the stock it actually opened up, but still lower by the amount of the dividend paid. And they actually adjusted the strike on this one from 55 to $2.10 lower. So now my strike is, as of today, $52.90.
I like that, sir. That was a good example, because that's a scenario we've all encountered, and it's usually maybe scary for some folks, confusing for everybody out there. We always say in those types of scenarios, listeners, your first stop should be OCC. They usually have a circular that will explain that stuff. And then if you still have questions, obviously contact your broker. They should hopefully have somebody on staff who could walk you through it. Or if you're the case of Dan, you pound some Malört and you figure it out brute force style. I like it. See, it happens to all of us, listeners. We've all had, you get that notice in your thing. You're like, oh crap, what are they doing to me now? Right? What happened? I'm going to get some weird vestigial strike or some weird thing. That's, so yeah, it happens to all of us out here, listeners. It's important to be armed with info and not to freak out when that kind of stuff happens, which you're a listener of this show. So not to freak out, and just to go to OCC, and they'll take you down the golden path. Speaking of the golden path, let's go out to the listeners. By the way, I see a lot of our listeners in our pro chat saying how cool it is that they can just get it on the pro podcast feed. Yes, you can. That's another benefit of joining the pro. The second episode will go up on the pro podcast feed, so you don't have to wait a week. It's pretty freaking cool, if I do say so myself, excuse me. And then looks like a lot of you are saying it there as well. So glad to see you folks are having fun. Again, we don't mention that all the time, but that pro podcast feed, pretty freaking useful, listeners. All right, let's go out to Adrian. Yo, Adrian. Dan, is it possible to say the name Adrian without saying that, Dan? I think you're contractually obligated whenever you say the name Adrian to say, yo, Adrian.
Yeah, it is actually not physically possible.
It is not. Give me your best, yo, Adrian.
Hey, yo, Adrian.
No, that's not bad. Not bad. All right, good stuff. All right, listeners, who did it better? Dan's was pretty good. I might give my own vote to Dan. There we go. He really got into it. That was good to see. All right, let's go out to yo, Adrian. He says, this goes back to what we were just talking about, Dan. Do you foresee a time when exotic options are available on major brokerage platforms? We were just talking about this, Dan. It's amazing. But Dan kind of wrote this off as never happening. I will leave a sliver of hope, a glimmer, a ray of light on the future, just because I've been around exchanges long enough. We have more of them going public, Dan. MyAx just going public, I believe, last week. So they are all pretty much for-profit public entities at this point, or trying to become so in the future. Guess what happens when you do that, listeners? You have shareholders, you have analysts, and you need to make your numbers and find new ways to generate revenue. There's only so much you can squeeze out of market data or everything else. So if they see a demand for a particular product and category, they will go down that road. We're seeing Flex come back in a big way, which I never anticipated a few years ago. I kind of thought Flex was just, the kind of long-term, kind of funky, little subcategory of options used by some OTC firms to hedge some specific risk. And that was really about it. It would never grow beyond that. And now it's become the hottest category in the space. Every exchange is spinning up Flex books. We're seeing Henry and his guys over there at Trade Alert. Now, if you do a regular scan with his data, they include Flex just in it because there's so much Flex going up right now as a result of these defined outcome funds using Flex to hedge their dividend and early exercise risk. There's a lot going on that I never anticipated. So I won't write off that this can never happen, but I do think it's pretty far down the road if it does happen. I think we have to wait and see if this NASDAQ proposal for single name 0 DTE, if that's got to happen first, Dan. And then we can get the exotic. And if they do happen, I think, as I mentioned on the last episode, I think the use case that I think would probably be the most intriguing to people would be those knock-in calls. You just market it, Dan, as a YOLO knock-in call. Somebody will buy that.
Oh, yeah. Yeah, for sure they will. I mean, it's interesting because the Flex options, they have picked up a lot of steam, but, you can't log into your Thinkorswim and trade Flex options. I mean, it's not over the counter, but it's still not exactly super democratized. It's more, classic Republican form of government than pure democracy, so I don't know. And right now the Flex doesn't allow for knockouts or anything. It's still pretty limited in how it works. I mean, yeah, I wouldn't be surprised I wouldn't be terribly surprised if they offered it, just because you're right. It's a corporation, and, at some point corporations just get to the point where they shamelessly think of anything to grift money, whether it serves the public or not. Not saying the exchanges are doing that or anything, but that's the downside of corporations, generally speaking.
If they see dollars, they will go for them out there. So yeah, interesting stuff. By the way, Dan, I have bad news for you. Our chat is voting for me in the Yo Adrian thing. So
Wow.
even though I gave my vote to you, I was generous host that I am. They voted for me. I think they know where their bread is buttered, sir. But let's get out of here. That's Dan Stews. Let's get out of here on this question. I like this handle. Big, not just Big Bill, Dan, but Big Bill. He's double big. He's he's quintuple XL. He's not just 2XL. He says, have we reached peak event market? I ask because Robinhood just added college and pro football to their event offerings. I kind of wonder if we are losing the thread here of what these markets are supposed to be. Yeah, if you want to hear about that, I literally just chatted with the folks at Robinhood about options, but also about the event stuff, and some crypto as well. So that should be hitting the full network pretty soon. The pro folks already got it. So stay tuned to the full network to get your hands on that. But yeah, it's kind of interesting. Dan, in general, what are your thoughts on these event markets, in particular, this kind of category, the stuff that goes beyond your, will the S&P close above or below this level, stuff that is beyond the realm of finance, sports, politics, maybe celebrities, Oscars, fashion. How do you feel about that kind of stuff? Because that seems like what he's getting worked up about.
Yeah, I mean, well, I think there's two questions here. How do I feel about being able to gamble on this stuff? Fine, great. How do I feel about a brokerage firm offering it? I don't know. I feel I have negative feelings towards it. Let's just leave it at that.
It does kind of give it the imprimatur of respectability, right? When your broker is offering it, as opposed to Joe's House of Exotic Binaries, and he can do a Chiefs binary or something like that. So it's a little bit different. I was speaking to some folks in the brokerage space recently, not on the network, and they were kind of expressing a little bit of, maybe we've gone a bit too far down the rabbit hole. But you know what? Blame the Kalshis and others. They're they're going with the kind of like we said before. If they see money in a product, they will go there, and they don't have the long brokerage pedigree to worry about that the other firms do. So they don't care as much. So you're kind of competing in those waters, Dan. If you don't offer it, I guess someone else will. Interesting stuff. Yeah, I kind of color me. I don't mind seeing better, real, quote unquote, trading vehicles coming to these markets. I think that could be good, improving on what is offered on, let's say, a DraftKings and things like that. But you're right. There is some danger in just having these brokers chasing the next dollar with any product, regardless of its utility out there. All right, great questions. That music means we are coming up against it here for part 2 of our doubleheader. Dan, did you have a good time? 2 episodes in the can, sir.
Yeah, this was great, man. We covered some pretty interesting stuff today.
We got exotic. We got into sports wagering. We talked about adjusting puts. Kind of all over the options and derivative spectrum today. A fun double header, if I do say so myself. I clearly and demonstrably won our Yo Adrian battle, so a lot of good things happened today.
Disappointing.
Well, if folks want to maybe voice their own opinion on who won that battle, or just reach out to you for some fun talk about $2 Chuck and Malört, where should they go? What should they do?
Well, you can reach me always at markettaker.com, 2 T's in a row. And, if you just click on join free in the top right of the web screen there, web screen, is that a thing? Web screen? I don't know. Of the website homepage, you'll be able to get a bunch of free great stuff.
Web screen. We'll go with it. We're going to add it to the Oxford English Dictionary just for you, Dan. Check it out on a web screen near you. Markettaker.com. Someone in our chat pointing out, what's the difference between, gambling on the Chiefs and just buying some open calls? And, they're not quite that wrong. There's a bit of similarity. You can still gamble in financial products out there, listeners. But that music means that's going to do it for our doubleheader. If you're hanging out in the pro, hang out. I'll be back in a few minutes with our good buddy, Miss Carly Garner, to break down the wild world of futures. What is going on in the futures market? Spoiler alert, it's wild stuff. We had ETH breaking into the top 10 last week. How wild is that, ETH futures? So who knows what we're in store for this week? You got to tune in to find out. Then I'll be back one final time. 3 shows not enough for you wild monsters. Nope. Got a 4th show coming at you later today in the Hot Options Report coming at you after the bell. You pro folks get all that stuff in your ear holes today. Everybody else gets it on the usual broadcast time. If you want to check out the pro, theoptionsinsider.com/pro. Then we're back again on demand for you folks and everyone else next week. Another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.